Well, welcome back, guys. And this time around, I'm going to do the analysis on the British pound dollar, which is correlated to the USD, the NZD USD, and negatively correlated to the DXY and the US dollar versus the Singapore dollar. So most of the times, I borrow the price action from of one pair to another when I'm not very sure of the current price action which is being offered in the specific pair. So when I see that maybe the price action on USD is a little bit clear, I'll follow that kind of price action in relation to the British pound dollar and the NZD USD. Likewise, the relationship between the US dollar versus the Singapore dollar and the DXY. If the DXY is very like uh, trashy or it is very much consolidating, I'll employ the price action being uh, printed on the US dollar versus the Singapore dollar. In the opposite is also true when the US dollar versus Singapore dollar is rough. That means I'll go to the DXY for good price action, which is working with my model specifically. So let's get to business here. So what you're seeing here is the British pound dollar chart, and we are on the seed trader platform there. So this is the monthly chart. In the We have pitched the previous year's high, just like I indicated in the previous video that we are bullish on the monthly chart for the British pound dollar, and it has been this inefficiency here that has been supporting price up in alignment with the fundamentals there. So the move to pitch the buy side liquidity started from this point to that high there. So what's the relationship between the two pairs there, the British pound and the USD? When I look at previous reference points like the old lows or high, it is where I use the aspect of correlation to see if there is a difference or a difference in price signature. That is, I would see like the British pound dollar fetch the buy side liquidity, but maybe the USD might not. So quickly, this is the previous year's high, just like the British pound dollar. But when you look at this, it did not purge the previous year's high, just like the British pound did, but there was this internal high here within this range here, this point here, the buy side liquidity marked in the low here. There was this high here which has been purged, but on the British pound dollar, this the high there, like this one here, was purged earlier before price traded into this inefficiency. So this one became the target there. So how do I work with that kind of price action? When I see that the one pair, that is, for example, in this scenario, the British pound dollar has purged the buy side liquidity, and yet the USD has not purged the buy side liquidity like this one here. And my TP is here, just like my TP, my take profit is here. I collapse the trade on the US dollar if I have any, because I understand that if this one has got to the buy side liquidity and the this one hasn't, that means I have to work with the high or low that the other pair has paged, just like as the other pair was paging the probable buy side liquidity there. So when this one was paging the buy side liquidity here, I have to watch for the USD of what is paging. So if in this scenario it was paging this one here. So after paging this one, I have to collapse the trade and not hold for longer for this one there. So back to the price section there, the bias now switched to being bearish there. But how far the bearishness might go, I don't know. The market structure in terms of my model is going to at least give me a hand for what I should expect. So I'm going to switch to the weekly chart there. In the previous video, I indicated that there is there was level one, level two, and the price page the buy side liquidity there, and the once it page the buy side liquidity traded lower, reached for the inefficiency which is on the monthly chart, and this one has been supporting price up. Supporting price up, it also formed the levels there, level one, level two, purged the buy side liquidity here, traded lower, and when it purged the buy side liquidity here, I was expecting it to retrace a little bit on the daily chart, but this week here delivered differently than I thought. I just thought that maybe when it uh, purged the buy sell liquidity here, the next candle might tap into an inefficiency which could have been made inside this range here and then continue to the upside. But this week here was just big enough to purge the previous year's buy sell liquidity. So for now, working with my model there, I'm expecting price to at least reach for this inefficiency there in terms of my model. I would love to see it trade lower and lower. However, it might deliver differently, but the model at least gives me the hand to say that we should now be trading lower and lower up until we sweep the sell side liquidity on this level here. So let's switch to the daily chart to see what we have in terms of market structure. In the previous video, I indicated that this is level one, level two, and I was expecting a purge on the buy side liquidity here, causing a reaction to this inefficiency there. That is on this was a Tuesday. In the Wednesday, I was expecting price to trade into this inefficiency, and so maybe continue into this inefficiency before price being supported to the upside. However, it was delivered differently, as you can see. So by being bearish, I have to expect a break in market structure, and the daily time frame here has already given the price print there. There is a break of market structure here, and this is level one, level two. We're going to see that very clearly on the lower time frame, say the H4, level one, and I have the level two there, and then price trades lower there, but do not get to the inefficiency there, which I like to see most of the times. Now, this is where I also use the correlation aspect to see how price has delivered on the other pair in relation to a similar level there. So let's switch to the USD. The USD there on the weekly chart. I'm not going to waste any time. I'm going to switch to the daily chart because working with that kind of chart on the British pound. So similar levels have been made. This is level one, and this is level two. And as you can see, we are within this inefficiency there. So price broke market structure here, turned back into the range, broke market structure again, retracement, then traded lower, like purging the sell liquidity there, and now switched back into the range targeting the inefficiency. This was probably news which supported price into this inefficiency there. And now we should be seeing price trade lower and lower in relation to the model that I trade with based on the price action, the British pound dollar. So for now, This is the current price action, and I'm expecting price to trade lower and lower. Switching to the H4, we might see the price action clearly there. So this is the break of market structure, level 1. Level 2, price returns back into the range, dips the low, turns back into the range, then comes for the inefficiency, the net inefficiency there, and now drops lower. And now I will be expecting a continuation from this level with big momentum candles there. I don't know how price is going to deliver by the break of the week on Sunday, but that is the bias that I have for the USD in the British pound dollar there. So this one switching to the H4, you see that the levels were very much compacted there. The levels were very much compacted here. One, level 2 here, and price returns back into the range, dips the low, back into the range, and you see that there was no inefficiency there, just the buy side liquidity. So with that aspect and working with my model, it gave me an idea that I should be bearish in the. I did trade the move here up to think certain point here. Yeah, if I was using the MT5, you'd have seen that. But that is just it. I'm expecting price to be trading lower and lower up until maybe we reach for these levels here. So this identified as level 1, level 2, and this was just the distribution. So price should just run very fast and possibly clear the low here, but with a break within this marked area here, and I'm going to return back to the daily chart for a proper view. That is within this inefficiency, we might expect a break maybe before a continuation to the downside. So for now, this is what I have for the British pound dollar and the USD in terms of price action. I'm very bearish up until I see maybe a change in market structure as we trade into the as we trade into next week. But for now, I'm very bearish in terms of my model there, and this, that is to say 1.2850 at least. Is it? No, 1.29 should be my target for now. That is, I'd love to see price to get within that price area. That is it for the British pound dollar and the USD there. So with this H4, let's miss back. With this, I see that there is a break of market structure here. This should be level 1. So probably by next week, if I see price reacting to this inefficiency, I might sell it to the low there as a short-term target before maybe allowing for price to trade into this inefficiency there. That is based on the current price action and how the market closed for the previous week. So getting back to the USD which is very positively correlated to the DXY, like to see the current price action. So not something that I can see. Let me switch to the weekly chart. Yes. So there is this level here, level 1, and there is this level here, level 2. Beautifully, price returned back into the range, traded lower there. Maybe we might see price maybe trade a little bit lower again, then continue to the upside. But for now, with this price action here, this point here will be the determinant for a change in the trend. So if price trades above this one here and leaves a fair value gap somewhere here, an inefficiency, I would expect price to be supported higher up because as you can see, it has cleared the sell side liquidity there. So level one, level two hedges the sell side liquidity. Price has to return back into the range, retrace a little bit, then continue to the downside. Let's switch to the daily chart and see what's currently unfolding. So it's a little bit rough there. So I'm gonna switch to the DXY and maybe I might have at least good price action there. So let's switch to the DXY. For the DXY there, I'm gonna go to the daily chart. I see that I was already following the move there. I'm just gonna delete the lines there. And yes, it has taken the sell side liquidity there. This is level one, level two. Price has already returned back into the range. Tried to sweep the low there, but it failed. What next? I'll be expecting price at least to maybe start trading higher and higher up until we get to this low here. I mean this high here. So in terms of the price signature that I expect around this area, I have to see at least this kind of price signature most of the times around this area for a good reversal. That is, this is the base case scenario if price was to trade like this. That is to say, if price like traded from this point traded to this high here and then dropped lower, clearing the relative equal lows made here, I would then be very aggressive in terms of the bullishness there. But for now, I'd like to work with the price action that I have here. So price switched into this inefficiency there, traded lower, trading lower, it failed to push the low there. So possibly this one should be the target. Let me switch to the forward chart. In the I'll be working with this high and low there. So as you can see, as price was trading higher, targeting the inefficiency that I had marked, there was level one here, level two. Price turned back a little bit, pushed the buy sell liquidity. There was level one here, level two there. It was pitched there, turned back into the range, clicked into this inefficiency there. Now it is bullish there. So possibly might see price indeed trade higher and higher. So let's switch to our chart and see if that's what we have. Yeah, so I believe this is a breakout market structure here. Price traded back into the range for this move here, then lower, then higher up. Inefficient. So this should be my level one there. in continuation to the upside there, surely. So possibly this is my level one there. 15 minutes time frame. Yeah, so that is it. So be focused on this one here being my level one there, and be expecting price to trade higher and higher in the targeting the high here. So this was Tuesday, 3rd September. That high was made that day. So I'll be targeting at least that high there. Level one, level two, push level two, get back into the range, swept the low, took the low hanging fruit for me there, then jumped up. So this should be indeed the level one. If I see anything, then I think the market will show me the hand on Monday or Tuesday. But for me, I'm very bullish for the DXY and the bearish for the other pairs there. So this is the monthly time frame. So this would be my level one there, level two there, and then so hedging the buy side liquidity, and then so on and so on. The monthly on the weekly chart, you see that there is level one, level two, price reached into this inefficiency there. So we might go down a little bit maybe and then higher, but for now we can see that price was just reacting to this inefficiency here. That's why we have a bearish candle. So with that break in market structure, if it continues, we might really trade above uh, this level here, targeting this inefficiency, or above this one here, which we might then land into this inefficiency and possibly clear the relative equal highs here and then continue higher and higher. So we might just have to wait and see what's gonna unfold from next week there. But from that break of market structure in the M15 there, hopefully might see the bearishness hold on the British pound dollar and the bullishness hold on the DXY and the USD SGD there. So that is all in terms of the bias there. In terms of bias, that's what I had for the correlated pairs there. Thanks for your time. I hope we might review the price action when the week breaks on Sunday and then Monday and Tuesday, and maybe we might see if there was any twist or different price signature in terms of price delivery when the days unfold. Thanks for your time.